Now it's our pleasure to introduce our presenter for today. We have Daryl Dorrell. Daryl Dorrell is the founding partner of Financial Forensics, a boutique forensic accounting practice in Lake Oswego, Oregon. He practices in civil and criminal matters throughout the United States and has served as an expert witness consultant in over 500 matters. He has provided training to the Federal Bureau of Investigation, United States Department of Justice, and Securities and Exchange Commission, among others. And with that, I'm going to turn the time over to Daryl.
Thank you, Shonda. Appreciate your expertise, and thanks to all of you for attending. This session is focused on the financial issues related to COVID, as obvious by your sign-in. And to ensure that we cover the content appropriately, notice we have another large group today. This is the 7th or 8th time we've done this session. Each group has been very large throughout North America. And notice that we've got a multimodal distribution here, which reflects all of you, meaning we have some people ranging from very experienced and definite background in the material, all the way to those that are new to it with little exposure, and people in between. And the purpose for showing this is that when you see these materials today, if you have questions about them, how to apply, how they need to be implemented, so on and so forth, put them in the chat box you'll see here, or contact me later. Our session Tuesday, 2 days ago, I spent a fair amount of time with people afterward, assisting them in implementing in their client bases. Now, before we get into the session, I'd like to welcome a couple of people. One is Craig from the Midwest, and he's an executive with a public company. So delighted to have you here, Craig. Hope you pick up some content material. Also, we have Heidi, and Heidi is a very experienced educator, also in the Midwest. And they're looking at this material because it's not just related to accountants. It's related to anyone who's trying to direct and manage people resources. So delighted to have you here, Heidi and Craig, and the others whose names I can see. Some I know, some I don't, but regardless, I want to make this beneficial for you today. The concept we're covering is something called triage. And some of you, say with a military background or say a healthcare background, will be familiar with that term. And it has to do with condition-driven patient prioritization, things like airway, blood flow, etc. The corollary to that is the business definition, and it's condition-driven cash and people prioritization. So we're dealing with COVID. All of you are in various degrees of, by various degrees of being impacted or affected by COVID. And most importantly, as you pick up these tools, you can apply them as consultants to your client base or within your own company. Spent a fair amount of time 2 days ago assisting a woman with a large accounting firm on the West Coast on how to put this into place for the people in the firm that they could apply to their clients. So this is all about realistic, basic tools that drill down more deeply than mere financial statements. They just don't do it under the circumstances. Now, the concept of triage, in this case, tactical triage, comes from the Marine Corps. And you'll see it refers down here at the bottom, the FMS 0107, or the Foxtrot Mike Sierra Oscar 107. And that tells you in a battlefield sense that we're applying that and correlating it, say, to business crises. And crises can be nominal, they can be severe, and that's how you prioritize the treatment being the tools you'll see today. The Marines identify this term, tactical triage, as the categorization of casualties for the priority of treatment, particularly in combat. And it requires, with respect to each of you, informed judgment, knowledge, and courage. And courage to help your clients make the right decisions in the right process. And it is a continuing process and requires a fair amount of expertise and capability. Now, as we walk through those, I want you to keep in mind a basic concept. And the concept is this: as measurement goes, so goes the behavior. Now think of that. I'd even like you to repeat it to yourself. As measurement goes, so goes the behavior. Now that applies to virtually everything. And for those of you with quantitative backgrounds, you'll remember Eli Goldratt, the author of several books, including one called The Goal, that says, he doesn't phrase it this way, but it's the same concept. It says, if you want anything to improve, you measure it. And by measuring it, then you're changing behavior. The behavior that could be of students, it could be of clients, it could be employees on a production line, it doesn't matter. And I'll talk a great deal about that in addition to showing you the three basic tools that relate to this measurement concept. Now, a bit of a slow net today. The three tools for preview are rolling cash flow, daily revenue chart, and what's called the CCO, the condition, cause, and outlook. They look just like this. Each of you received 2 Excel spreadsheets, one of which is rolling cash flow. The other one is daily revenue. And then the other one is a list of, you could still do this, as you'll see later, in Excel, but there are other tools out there like Mind Map and others. I gave you a list of, and Chanda forwarded to you, a list of 20 different free apps you can download to apply CCO. So we'll be looking at each of these as we implement today. Now I'm speaking to you from Oregon, West Coast, and I'm going to skip through the background, although I would recommend for depth, there's some materials here we wrote for the United States Department of Justice. I was motivated to do this first one, counterterrorism, after I'd been at Quantico, the FBI International Headquarters, training agents, special agents, with regard to how to use accounting as counterterrorism tools. And after 9/11, it motivated me to document those and write those with my partner, Greg. And we talked with DOJ. They agreed. This 64-page monograph went through many levels of review, but it's available off the net through the US DOJ site. Likewise, corollary to that is forensic accounting counterterrorism weaponry. This one was so popular, they asked us to write another one. The point being, accounting tools are often used as counterterrorism tools. They're also used to manage businesses, and that's where you come in. How to use very specific and often very small amounts of money to manage your client crises and circumstances. We also were asked a couple of years later to write a third bulletin for DOJ, which we were happy to do, although it was an enormous amount of work again. But it deals with people and money investigation tools. We also have a formalized methodology here available off the net that's interactively hyperlinked. And each of these are either have a drill down, a drop down, or a hyperlink to some more supporting detail. Now that gives you some context with respect to this phraseology. As measurement goes, so goes the behavior. As measurement goes, so goes the behavior. That's a reason report cards are given. It's measuring the progress or lack thereof of the student. And the idea there is to motivate them to do better. Now, let me explain that in more detail. There's the definition we've used of forensic accounting since 1993 is the art and science of investigating people and money. And if you heard me speak and train before, you've heard me say this many times. But that's our definition of forensic accounting. The first point there is that people are listed first. People and money. So we're working on a civil or criminal matter, it doesn't matter. We focus on the people first, because by doing that, the money then becomes self-evident. Now here's a quick example of the people aspect. all of us are very familiar with what's going on now. When I first prepared these slides about 6 weeks ago, this is the most current information I could get. But we know that there's an enormous surge in unemployment and related unemployment benefits. Gold plummeted before that, is really coming back strong, which is what you would expect in an economic crisis. Some anecdotal examples of that would include commercial flight activity, fairly consistent, except of course because of COVID-19. And oil at the time was $22 a barrel. And you'll remember, not just shortly, a few days ago, actually, several days, that the price of oil is actually negative. The point being, there is dramatic impact to people and to the economy. Now, each of you, as you're trying to deal with things like improving your client sales, improving your sales, dealing with the client stresses they're affected by, you need a little bit of a background. So each of you, or most of you, are CPA types, and you're going to be asked by your clients to lend assistance. So you need to understand that since they're people, they're going through what's called the stages of grief or stages of loss. Now, this was popularized several years ago by an analyst known as Elizabeth Kubler-Ross. Some of you may have heard of her, and she has been supported by David Kessler over the years. And Ross formalized the process, the stages of grief. And they're identified here in summary: denial, anger, depression, bargaining, and acceptance. And I've also given you a hyperlink down here, so if you want to pull more detail about this information. But the point being, each of you on this call have gone through various stages and are probably still going through various stages of grief or loss, and your family members. And so you've got a complex set of variables here affecting your family, just like your clients have the same set of circumstances. The CEO or the founder of a construction company, for example, has people working for him, some who want to come in, some who don't. Perhaps demand is declining, costs are going up, revenues are down, cash flows being stressed, etc. And that introduces a sense of loss or grief. And there's something called the trauma scale that ranges from about 0 low to 100 at the highest. And for example, let's say you have a spouse who just passed away, you've been married to a number of years. You will score about 100 on that scale. If you lost your job or your position, you're scoring about a 90. And you can actually quantify that. I've given you, like I say, that hyperlink to find some of that. But the point being, you're experiencing it and your clients are experiencing. So when you approach them and say, gee, I'm your CPA, I've been doing your work for years, but I know how to fix some of the problems you're dealing with. And the problems that will come to their mind immediately are things like declining sales, things like uncertain employee forward-looking issues. And that's it. As you understand those processes that go through, and some of these loop back periodically, it'll enable you to talk with them to provide better consulting input. Now, the corollary to that, as I was building this material, because some of this we've had for years, others we've updated, I found something fascinating from a company called McKinsey & Company, and very, very well-known public international consulting company, been around well over 100 years. And there's a hyperlink for them too. And they've taken Kubler-Ross and applied it in a business sense. So what we'll be looking at today is those 3 tools. And notice what they state here is that companies need to think and act across what they call 5 horizons. The horizons are first resolve. You as the CEO, you as the CPA advisor, you as the key person, you, someone who's providing input and guidance to these entrepreneurs and these companies at various stages of growth, need to realize there'll be a sense of resolve that must come into play, meaning the minute the CEO calls you and says, hey, Marilyn, we have a serious problem. You've done our taxes for years. Can you help us out? And the answer is yes, because number one, you understand the personal aspects of what they're dealing with. And number two, you also need know now how to take them through these horizons by the three tools I'll show you in just a moment. So first of all is resolve, or resolution of what's happening, and COVID-19 is indeed affecting it. Once that resolve starts to take root, then the resilience aspect comes in. And notice, it's interesting, when I read this, it's about, I don't remember, 30 pages maybe, they refer to the resilience aspect with specific focus on the cash management challenges. And that's what we'll be dealing with very shortly, one of those three primary tools I mentioned. As that's put into place, then there's a concept called return, meaning how do we get back to scale our business appropriately under the circumstances. That's that triage concept. And then reimagination, a very good example of that is virtually everyone on this call today is either at home or another location, or perhaps in a very empty office watching the session. So that reimagination says, how do we need to do business differently? And that also is reimagining your clients and how do they need to do business differently, and how can you assist? And then finally, reform. That's then effectively moving into this segment that takes it from resolution all the way through. So I recommend you pull down that McKinsey material and think of, first of all, the Elizabeth Kubler-Ross stages of grief. Number two, the corollaries: resolve, resilience, return, reimagination, and reform. And then into these tools. Now, I've talked a little bit about people. We just covered that component. And most accountants often recoil with the concept, you're an expert in money, but not people. But the better you understand the people and where they are, the more effective your advice will be. So let's look at the money side here for just a minute. Now, we're going to drill down into a concept called triage. Those of you with a military background will be very familiar with this. A definition from this particular dictionary dates it back to 1727, although I can guarantee you that the concepts date back centuries before that. The idea is, how do you manage wounds, particularly on a battlefield? And you can read the explanation here as it's supported from the online dictionary. But triage is originated in battlefield injuries and is transitioned into healthcare. Those of you with that kind of a background are very familiar with that, and I'll show you how it applies in a business sense. So the corollary there is what's called tactical triage, requiring this judgment, knowledge, and courage. Now, this material, again, from the Marines, you can pull it down, read it, very helpful. And you'll see that they have what they call triage factors. Identifying items like threat to life, chance of survival, the amount of resources required, types of wounding, etc. Now, in a battlefield sense, and I talked with a good friend of mine who's a Navy corpsman for a number of years, great experience also with DEA, post-military, and he enlightened me a little bit on some of the aspects of this, but they have these 4 color codes as a corpsman on how to treat triage the Marines, and similar in all the services. But let's say there's a battlefield occurrence and we've got people out there, assets out there who are in combat, and there's certain wounding come in. So as the wounded come in, the person dealing with the battlefield wounds has to decide, is it a serious injury? Is it a medium injury, a minor injury? Can we ignore it? Do we have to evacuate him? So on and so forth. And it's color-coded in the sense that there's a minimal concept. It's not life-threatening. The chance of survival is high, but not very time-consuming in resources. And that could be things like frostbite and small bone fractures and so on and so forth. If it's a little more serious, you're going to have potentially life-threatening considerations, still high chance of survival, but can be somewhat time-consuming. Things like fractures and dislocations, other injuries, spinal, head, or abdominal, etc. And then the highest level would be things like requiring immediate response. That's the red code. Again, high chance of survival, not necessarily time consuming, but the wounds could be compromised airway, or say breathing issues, severe fractures, so on and so forth, and hemorrhages. On the other hand, there's a category called black that basically says, if I've got 4 guys to treat and they're in these various conditions, I'm probably not going to spend time here, unfortunately. I'll work my routine, red, yellow, green, and if I have time, I'm going to get to the black. So just like you have to make triage decisions, and the clients who are experiencing this trauma, this gives you a sense of what happens in a battlefield. And that's what you're facing now, a battlefield sense. So that you have to apply triage and decide the extent of injury, the likelihood of recovery, and so forth. Now, I'm going to focus on the 3 basic tools. One is rolling cash flow, the next is daily revenue chart, and the third is called condition, cause, and outlook, or CCO. Now, we've used these tools 20 plus years at least. I recall in my junior year of college, an undergraduate, I ran into rolling cash flow and thought, gee, nobody will ever use that because all they have is financial statements. And for those of you who have had background and have clients you're dealing with, you realize that financial statements are just not sufficient. You need to know on a day-by-day basis where you stand from a cash flow standpoint. Now, that ties into that aspect of, as measurement goes, so goes the behavior. And you'll hear me repeat that many times. And as I say, if you want more background, contact or read an example of the goal. That'll tell you exactly the criteria. So this triage concept, we've applied it in a 1-chair beauty salon. A lady who was in trouble, didn't know what to do, contacted us, and she had 1 chair, and we showed her the rolling cash flow and the daily revenue chart. On the other hand, we had a Fortune 500 company, about $2 billion in revenue, who contacted us, and they had a division that was critical. They were in a very, very high-tech metal type manufacturing process, and this particular division just was not performing. And it, so because of the bottleneck concept, it affected everything else. So we got involved to use the same tool, rolling cash flow, daily revenue, and so forth. Now, everywhere in between, we've assisted law firms, we've assisted movie theaters, we've assisted diesel distributors, a ship breaker, wholesale distributors, environmental engineers, etc. So your client base needs these basic tools, reminding that you're going to include your judgment, knowledge, and courage to provide, guide, and make these decisions. So let's look at rolling cash flow first. I just got a chat here actually from Aaron. Thanks, Aaron. I won't mention your last name, but the Marine Corps rules for battlefield triage: stop the bleeding, start the breathing, treat for shock. Exactly. That's exactly what we're talking about. Thanks, Aaron. We really appreciate, and we appreciate your service too in the Marines. Thank you very much for serving the country. And that's exactly what we're applying here. Now, in the rolling cash flow sense, the first thing you want to consider is something called CAD: concentrate, accelerate, and decelerate. And I kind of stumbled upon this a number of years ago. I was a senior in Ernst at the time, Ernst & Ernst. And they asked me to go out and work with a client of theirs that had a movie theater, multiple screens, and he thought he had no cash. Now, at the time, in those days, there was no such thing as the internet or even credit cards. And so he had to know on a periodic basis where his receipts were for the screens. So with 18 screens and throughout the city, this happened to be St. Louis, he had to have 18 separate bank accounts in several different banks because of location. In those days, naturally, cash was pretty fungible. And so therefore they had to have proximate the ability to deposit the cash to get it into the bank account. So he called, he was in serious trouble, he thought, and the way movie theaters work is that they have to put up substantial amounts of money before they ever get the films to run. And he contacted us, and or after I first met with him, he said, I need about $400,000. In those days, that was an enormous amount of money. He said, all I have is about 50, maybe 100,000. What do I do? So the first thing I did was determine how much did he really have. Now with that concept of CAD, and I remember going to a local large bank branch there and talking to one of the bank people about cash management issues. And the process is called CAD. Concentrate, accelerate, and decelerate. Concentrate everything you have right now and freeze it. Accelerate the inflows and decelerate the outflows. Now, that may sound self-evident to your accounting types, but I can tell you all the time we encounter companies that, for example, one right now we're assisting who's in trouble, large construction firm. And the controller specifically pays all bills every day. If a bill comes in that's due in 21 days, for example, she authorizes payment the next day. On the other hand, they only bill monthly for receivables. So consequently, they've got what we call anaconda feeding. Just like an anaconda may not eat for months or even up to a year, but it's a huge meal. It's the same thing. There was an imbalance in the flows. And so look at that first as you're dealing with your clients. Keep in mind those flows and how they do things. And you often will have to modify that to decelerate all the outflows and jig it a handle, accelerate the inflows, and concentrate what you do have. Now, this will require a daily process that we'll look at in just a moment, and it has to be reconciled to the bank statements. And many, many times we've done this. Often there's a disconnect between the accounting people, the CEO, and us with regard to the cash. It has to be reconciled. And I know that's preaching to the choir here, but keep that in mind. Now, the way this works is one of the spreadsheets you have, the Excel spreadsheet, you'll see it's exactly this one. And it has three sections. It has a yellow section, it has a green section, and it has a blue section with a total here in the reddish type color. Now this is called rolling cash flow. And the reason it's called that is that this section in yellow is history. And so assume today's Monday and you're standing right here and it's Monday morning, you got a cup of coffee, the day's about to break, and you realize you've got Monday, Tuesday, Wednesday, Thursday, Friday. This company only works on 5 days a week. And then you have 3 weeks each on a forward-looking basis. So having this history as a reference point and this day-by-day type activity, which I'll show you in just a moment, which automatically updates this weekly type activity, enables you and the client, of course, to have headlights. And when I mean headlights, for example, you've got precise history here, presuming you told them how to do their job and it's reconciled, etc. You have a forward-looking day-by-day estimate that changes depending on what happens with receipts and disbursements. And you have a longer-term look. Now, the headlights are great. Just like assume you're driving on an old country road at night and there's no moon, and there are no street lights, and it's very dark. And if you consider driving that way, you'll be able to see pretty well about 100 feet in front of you. Maybe 150 to 200 less well, and so on and so forth. And so these headlights, the further out you get, the less clear you're driving. That also enables you to gauge your speed. Now that's what's happening here. You've got a historical look right here. You've got a day-by-day look here that automatically updates these pieces. And so you have a continual forward-looking aspect. Now, let's look at the history. Step one is when you deal with your client and they say they're in trouble, what do we do? You say, well, and they're going to typically expect you to say, look at financial statements. And financial statements are utterly inadequate. They're a completely useless because financial statements, number one, are historical. Number two, often don't get done until sometimes 2 or 3 weeks after the end of the week, end of the month, and so forth. So they're useless with regard to rolling cash flow. But this basic tool says, here's where we are today as of the beginning of this process. They're $1,300 here and here. Here's where we are at the end of the week and day, which you'll roll in just a moment. So right away, you've got a historical look of what our beginning cash balance was, what our inflows were, and in this client, and this is a real client, the amounts of receivables we got, the amount of transfers in, giving us a total available, less the flows out, things like expenses, which you could lift in more detail, we'll talk about in just a moment, payroll payments that were paid weekly, and other issues, tax payments, loan payments, etc. So you've got a historical look that you have the client assemble and prepare. Very simple to do off Quicken, or very simple to do off Mass 100 or 200, or any Oracle type system. But the idea, it has to be weekly, so you get a sense for those flows. Very, very important. Then the existing week, and like I say, if we assume this is June 5, you have a cup of coffee, you realize, okay, we have $88 in the bank account. We don't know about our receivables. We think we'll get $935 in, and consequently, since we expect to pay payroll today, we hope we're going to have to borrow $2,000 from the line of credit. So consequently, we'll start with $88.74. We think we'll get this much in at $29.35, and therefore we'll be available $3,000 in cash. Now, the payroll then will be $2,700. That'll leave us with $276.74. So at the end of the day, or whenever the mail shows up and we deposit the check, now we know exactly where we are with regard to the penny on a rolling cash basis. And as we update these roll forward. That's why it's called a rolling cash flow. So this $276.74 becomes a beginning balance. And these are, again, estimated until the flows actually come in. Notice no payroll on this day. There's a loan payment due here, so on and so forth. And so recall the yellow was history for reference. It doesn't change after this build. The green is day by day. And then the blue is updated by the green, so that this 2030 rolls forward to here. And notice we're estimating our weekly flows. We think this week we'll get in 3,500, which will give us this amount available. We expect to pay 3,100, that's mostly payroll, giving us a result there of 2,457, which likewise rolls forward, and so on and so on and so forth. And you have a continual look here of aggregate inflows and outflows for management purposes. Now, I could talk for 2 hours about the times we put this in. I've had a lot of CPAs tell me, well, that's so basic, they must have that. And I can tell you 90% of the time, the clients do not have even a basic tool like this. We use it in our firm. We put it in, I don't know, dozens and dozens of environments where it gives them the ability to manage their cash literally on a day-to-day basis. I even had one person from a large accounting firm contact me day before yesterday, I think it was, about this very issue, and she wanted to move the history back 2 more cycles. So instead of 4 weeks, it was 12 weeks history. And I think that's fine, because it gives a really good look at the flows and the cycles. And more importantly, it breaks down the expectations on inflows on a day by day individual basis, which then, this is the headlights. This is the forward looking aspect. We worked with one large nonprofit agency. They had about 60 million in revenues, and they had several different locations because of the services they provided. In those locations, unfortunately, they had an individual bank account for each, because the controller was basically incompetent when she originally set it up. And in doing so, they had no idea where they stood from a cash perspective. So we had them prepare this, we also had an arrangement in the first couple of days to have them call us every day. We'd have an all-hands conference call, and sometimes there'd be a dozen people on that call because the board was very interested in what was going on. And the call was to say, okay, this is Thursday. How much do we have in the bank? 896. How much do we think we'll get in receipts? How much do we need to transfer, if any? No payments today. Good. That rolls forward. And it took about, almost 10 days thereabouts to get them tuned into that process. But that became an essential tool for them, even to meet basic payroll requirements. So it's very, very simple, but very, very powerful. Now, for more detail, here's another client we worked with, large client. The step we told him to do was take all the expected payments straight out of, in this case, they had a general ledger package, not QuickBook. I don't remember exactly what it was, but prioritize the payment. This enabled the CFO and the president to make decisions. Just categorize them A to B, A to C, A being highest, C being the lowest. Identify the type of payment. So you have changed the names here, but these are actual numbers, and they owed $2,487 here. They owed $6,000 and change here. They couldn't afford to pay the entire amount, so we would work through this and model based upon the amount of $76,000 that they owed for that week. They contacted the vendors and said, here's how much we can pay according to the green. And that gave them a way to manage that cash with descriptors. So it can be very simple. You can expand it to include things like receivables if you'd like. But to implement it, you give them an Excel spreadsheet, the one you have. You insist that they put it on a 3-ring binder because that becomes reality to them. It also provides a long history. And sometimes we'll see clients who say that the president will late at night want to see what's going on. He or she may not be really an Excel jock, but wants to see, so he'll pull down the notebook to look at the history to get a sense of what's going on. Now that only takes about a week, maybe the absolute most 3 weeks. A large resort hotel we worked on took 3 weeks because the person responsible for doing the work was very, very unskilled. But once the rolling cash flow is into place, then you apply the daily revenue chart. And this is the one that increases sales. And if you put this into place, I can almost guarantee you that you will increase sales. I do not know the technical reason it works. There's a psychological aspect to it. And I could talk for 2 to 3 to 4 hours about examples, but it looks like this. The process is to determine how much revenue that the company needs for that particular month. And you'll see this is back in 2009. This particular company, I'd ask your client, how much revenue do you need on a monthly basis? Or at the next step, a daily basis. And they will look at you with a puzzled look on their face like, gee, I never thought of that. But for the most part, what you're doing is breaking this down into a manageable target. So let's say you've got a client who sells in, I'm just making something up, in hotel products on a wholesale distribution basis. And the salesman decides, okay, I think I need to sell about $75,000 a month. Bump that up a bit. And this is an actual case right here. We bumped it up to 90,000. And this is the completed month. And the month has the monthly, the daily revenue targets, the daily activity on a dual scale. Daily here, monthly there. Now, you've also got this material showing on a daily basis, sold 2,844 here, which gives us an aggregate of 2,844 for that month. Notice some of the days, like January 1st, they were closed. Then they sold $3,641. That's a total of $6,485. Notice it aggregates the total. Also, there's a goal towards what they hope to get. So the first day, as I said, they sold about 2,844. And you've got the daily revenue targets here, the monthly target, and now you know of $2,844, you didn't meet your daily target of $3,500. The next day, you sold 3641, and so that's posted. The reinforcement of that is that they're above target. And then the third day was a holiday, that was a weekend rather. And so the next day then, that sale amount was $2,750. So the most important part of this chart, there are two aspects of that. Number one, it forces everyone to think, how much do I need to generate today? What do I need to sell? What's my target? And the second most important, perhaps subliminal, powerful aspect of this is this cumulative line right here. This line towards the goal is always positive. Notice, as we add, this line is cumulative. Now, I could talk about this examples literally for hours. We had one client we were working with, small construction company, and I was there a couple of times as we would implement it. We set the targets for them. They would post it on Excel and then tape it up on the wall. And in the coffee room, everyone would look, how did we do yesterday? How did we do the next day? What's the cumulative amount? And it's an extraordinary reinforcing process that encourages people to sell, generate revenue, so on and so forth. Now, the power of it, I'm not a psychologist or a psychiatrist, but I can tell you so many times how powerful this has been. I'll give you another example. There is a large paper wholesaler in Oregon, in Portland, and they were large enough to have 3 shifts. And the way that shift work works, you know that if on the shift 1 is X, shift 2 is 70% of X, and shift 3 is 50% of shift 2. You know how that works. That's human nature. So we were called in to assist in shift 3 and how to get production up. Now, there were 7 guys on the work crew, and there was 1 foreman. So we met with the general manager, met with the foreman, and said, here's the arrangement, here's what you're going to do. Now, in that case, they had roll doors for the loading dock. So, you know, if the door goes up, then you've got a kind of a blank space there. And we had it built on large poster board. So we did the format for them, just drew it, nothing fancy, and put the poster board up so that it was out of the way for shipping and so forth. But just by having that chart up there, it was the foreman's job to train the people on what it was doing, and more importantly, use a magic marker with different colors to fill these in. Now, everything was fine, except the supervisor did not tell the 7 guys on the crew what was going on. There were numbers here, and he filled in the daily charts and the cumulative right here, but didn't tell the crew for whatever the reason. He knew he was supposed to, but he didn't. In about 5 days, the crew figured out what was going on. And for whatever the reason, they understood it. They figured either they were being measured or it was motivational for them. I don't know, and it doesn't matter because it works. It makes a difference. It makes a difference in these types of activities. Another quick example would be General Schwarzkopf. Before he was in charge of the Middle East process, Schwarzkopf was head of a helicopter battalion, and when he was put in charge of that, the helicopter battalion's readiness level was 75%. He noted that they had never achieved 70%. So in order to achieve 75%, he changed the target up here to 80%. And very quickly, the output went up to 75%. Now, we could talk all day about the psychological implications of that and so on and so forth. And I can't address that. I'm not trained or skilled or qualified in that arena, but I can tell you this works. It does indeed grow sales, and I don't know why, but it works. And if you don't know how to implement it, give me a call or have you and your client call me. Now, the other benefit of that is you can do in the present environment all of this remotely. You can talk to your client and say, hey, Marilyn, we got this way we can improve sales for your business. Would you be interested? She's going to say, of course, talk to me. So when you talk to her, you can do it all remotely, send them the material, explain it to her. I'll be on the call with you if you want, strictly as a courtesy, and help you make it happen. Now, the same thing applies to the rolling cash flow we just looked at a minute ago, but this concept of growing sales is extraordinarily powerful. As I say, I could talk for a great deal of time about how it works. It doesn't have to be fancy, doesn't even have to be colored. The important part is this daily goal and the cumulative line graph towards that goal for all the parties involved. Here's the detail on how to put it into place. Again, with the 3-ring binder, doesn't have to be that way, as long as it's say someplace that it's easy for everyone to go to and check in. Now, after about 2 or 3 weeks of that, or 2 or 3 days, depending on the business, it will have taken root in addition to the rolling cash flow. And then finally, you'll run into the next question. Okay, we've stopped the bleeding. This is the triage again. We've stopped the bleeding. We've got a handle on what we have to do from a rolling cash flow standpoint. Then now we've put into place, and this is May 1st is tomorrow, so it's a perfect time to do this. For the daily revenue chart, explain how that works. And then finally, the next question for the client will be, okay, we stopped the bleeding, we're generating revenue, or we're reducing costs, depending upon your focus. What do we do next? And you'll tell them, okay, that's CCO. That's the condition, cause, outlook concept. And then they'll say, what's that? And you'll say, and here's an extract from one of the reports we've produced in this process. This was about a Fortune 200 or Fortune 500 company that had, again, manufacturing that we put into place. And it has, CCO relates to what's called condition, cause, and outlook. They were in very trouble, a great deal of trouble, one of their divisions, and their question was, how do we fix it? So we met with top management and said, after interviewing and pulling some data, we said, here's the condition. I'll show you in a minute. Here's the cause of the condition, and then the most important part to them, to management and employees, what's the outlook? So condition, cause, and outlook. It's the CCO concept, and you can read this for more detail. Now, this was produced in something called Mind Map, which is an app we use, that I use on my iPad. It doesn't have to be Mind Map. You can use it on anything. But we had 2 pages to it. This page was, as we met with top management and said, the condition is you're insolvent, and your accountants know that's a problem. Your revenue in 2013 is $5.5 million. You barely had weekly cash. The cause was profitability. No surprise there, except the real problem was costs were unknown, and their direct labor costs were not controlled at the basic level, what they called lot level or job level. So observation, condition was terrible. The cause are here, declining revenues. And then the question for, top management, everyone else, what do we do? And we told them there's a concept called as measurement goes, so goes the behavior. So we help them implement daily task clarity, which is revenue. We changed the name a little bit to match the nomenclature of the company, and measured it on a daily, weekly, monthly, quarterly, and year basis. Now notice the daily emphasis. They only had monthly financial statements, and that was maybe 2 to 3 weeks after the end of the month. Then we put into place at the same time the rolling cash flow, again on a daily, weekly, monthly. And here's the, using the CCO concept, condition, cause, and outlook are the criteria. And look what was happening. Revenue is right here, the black line, and this was after the 2008 recession, but we got revenue up pretty darn strongly. However, look what's happening with gross margin. When we got called in here, gross margin was on a continual divergent decline. Operating expenses were almost nominal, but it was very clear that something had to happen with regard to, in that case, gross margin. So the CCO concept, recall, is from here, condition, cause, and outlook. And you'll see on this bubble chart, condition right here, cause right here, and outlook right here. And it's nothing more than identifying the priorities and the focus areas that need to be implemented in the business to fix it. In this case, they had no cost accounting. There was no manufacturing planning and control. Labor was the real problem. That's the condition. The cause was they didn't have measurement systems, even basic. The direct labor really had no idea what it consisted of. The financials were not timely and were irrelevant anyway. And so consequently, here's the condition, here's the cause, and here's the outlook. And we told them what to do. And you'll see the red highlights here. Rolling cash flow, fix that. Revenue on a daily, monthly, weekly basis. And also there was something called business vital signs, which are some other tools we don't really have time to talk about today. But this turned them around in about 18 months. And actually, they subsequently sold that division for several $1 million because they were so profitable at that point. Now, in summary then, these three tools I've showed you, rolling cash flow, daily revenue chart, and condition, cause, and outlook. For those of you with cash problems, that's the tool. For those of you wanting to increase sales, I don't care whether you're a one-person sales shop or whether you're a Fortune 500 sales force, it doesn't matter. Whatever your level of responsibility is, break it down into a day-by-day target, focus on the results each day, have a cumulative line graph, and I can tell you it will work, and I don't know why, but it works. Even if you have multiple salespeople, for example. We had one case where there were 7 salespeople, and so each of these guys had their own individual charts, and the manager of those people actually had a summary chart that identified the progress. So the power of doing this perhaps is subliminal, I don't know, but I can tell you it will work, and I recommend you put it into play. Okay, now Shonda, we're about due to wrap it up here.
Yep.
Do you need to do any polling questions, or?
I actually have the last poll question up right now, and we'll leave that up for a couple of minutes. So if you have any if you want to wrap up or anything, do you have any other additional information?
Yeah, thanks, Shonda. As put this into place, the sooner the better. May 1st is tomorrow. It's the ideal time to put in the daily revenue chart or put in the rolling cash flow. They're simple tools, but they're extraordinarily powerful. Financial statements do not do it. You need to break down this large problem into a day-by-day activity. Keep in mind, companies like McDonald's and Nordstrom's, huge companies, identify sales down to the individual person. So if, for example, I'm managing a crew of 8, say I'm a shift supervisor at McDonald's, I know to the minute how each employee is done because they have rung up their sales on an individual basis. And I'll be able to say, hey, Marilyn, how about if you just head home early today because we've kind of running a little short and the crowd's not as heavy as we thought. Same thing with sales. Nordstrom, for example, if you walk through Nordstrom, you'll hear announcements over the loudspeaker, very subtle. You won't notice them until you start to pay attention. And you'll hear an announcement that says, paging, suggest, please call the office, or something to that effect. Now, suggest is a made-up name, and it stands for suggest. And the mnemonic there is suggestive selling. So it's reminding everyone on the floor, suggestive selling recommendations to your customer base. So revenue can indeed be increased simply by measurement. I recommend you do it, simple to do, and we'll get through this crisis together. So Shonda, back to you.
Great, thank you, Daryl. And yeah, the polling question is ended. So thank you for presenting these last several weeks. It's been great having you. And I want to thank everybody for joining as well. We have some other webinars that are available, some resources available on our nacba.com/COVID-19 website. So feel free to visit that for some other helpful information. And with that, stay safe, everyone. And we'll talk to you later, Daryl. Thank you.
Thanks, Shonda, for your expertise. Appreciate it.
Thank you. Bye.